And that's the dilemma facing bankers. Deposit rate growth has been sluggish. You have to cut deposit rates before you can move on lending rates. And the question now is, when will those rates start to fall? After that hawkish macroeconomic report released by the Reserve Bank yesterday, hopes of the monetary policy easing were diminished. But at the CII annual general meeting, the finance minister stunned industry. Nentara and Akanksha Sethi report how the FM, with a smile on his face, let the cat out of the bag, and that too 30 minutes before the Reserve Bank unveiled its monetary policy.
It's 10:30 a.m. Finance Minister Pranab Mukherjee is at the CII annual general meeting in the capital. It's here that B. Muthuraman will hand over the CII mantle to Adi Godrej. But the Finance Minister steals the show. Mukherjee stuns the audience by clearly saying the monetary policy would be eased, though he falls short of giving the details, but making it apparent that something big was coming.
With moderation in inflation, there should be a reversal in the policy rates by the RBI. I think after half an hour or so, you will come to know that.
The FM statement caused quite a stir. We saw India's leading corporates visibly excited. Despite that, a few like Kiran Majumdar-Shaw and Sunil Munjal told us on the sidelines that softening of rates wouldn't be enough to revive growth or reverse the investment down cycle. The consensus is still the same as Monday evening. CRR would not be touched, but repo would be cut by 25 basis points. It's now almost 11 a.m. And it's Uday Kotak who from the dais breaks the news to a packed hall in New Delhi's Taj Palace. And it's beyond anyone's expectations. The repo rate has been cut by 50 basis points while the CRR has been left unchanged. The reactions.
I would have hoped for a CRR cut in the policy today, but since they had made a large cut last time, they thought it fit not to make a CRR cut. But going forward, I think we need a CRR cut.
Rather than getting excessively focused on detailed numbers, here is a bold move by the Reserve Bank to boost confidence and get a little bit of the animal spirits of investors back.
Growth was clearly suffering. I think that's very clear from the many numbers we have seen. So it is a good signal.
You would see reductions happening in a series of aspects from an interest cost perspective and enhanced liquidity in the market over a period of time.
Industry finally has something to cheer, but warn, this is not enough. The rate cut, they say, should primarily be seen as a sentiment booster, as a lot more needs to be done to return to the path of growth.
There are a number of other issues in terms of reforms which also need to be done. There are issues of land or minerals and allocation of mines and so on and so forth. 0.5% is not going to do some very huge things.
While industry was not expecting a CRR cut, they did raise the red flag on the liquidity front. It shouldn't come as a surprise. India Inc. is already wishing another slew of rate cuts. In New Delhi, with Akanksha Sethi, Nentara Rai.
Well, a dramatic day, no less. We will continue our coverage of the RBI's credit policy in just a while right here on India Business Hour.